area of mortgages. Why reverse mortgage?
Are there any red flags that you...
And it really saved this woman's life. I mean, for her, it was life-changing, literally.
Welcome to the Empowered Elder Podcast.
You've worked hard for your home, maybe for decades. But what if your home could start working for you? According to the National Reverse Mortgage Lenders Association, more than 1.4 million reverse mortgages have been originated since the program began. Yet, it's still one of the most misunderstood financial tools out there.
Today, we're sitting down with someone who has spent over 20 years helping retirees do just that. So Tim Oddo, reverse mortgage branch manager at Luminant Bank, and one of the country's leading educators on reverse mortgage planning.
Tim believes a reverse mortgage isn't a last resort. It's a powerful financial tool that can unlock freedom, flexibility, and peace of mind in retirement.
In this conversation, we'll separate myth from fact, explore how reverse mortgage really works, and we're going to talk about what it means to have financial dignity and choice as we age.
If you've ever wondered whether this might be the right move for you or someone you love, this episode is for you.
And we're your hosts, Tasha Beckman and Nicole Robilotto, and this is the Empowered Elder Podcast, where we talk about home, heart, and the next chapter of life.
Let's get started.
So our guest today, Tim Oddo, has spent over 2 decades in the mortgage industry and more than 10 years specializing in reverse mortgages. His mission is to educate, empower, and to help seniors live the retirement they deserve with confidence, comfort, and control over their financial future.
So Tim, before we get into the details, let's start with you. What got you into this area of mortgages? Why reverse mortgage?
Yeah, I mean, reverse is very unique, right, Tasha? I mean, it's kind of a unique product, and it's not very well known. And frankly, there's a big stigma around a reverse mortgage. And I started doing mortgages back in the mid '90s as a young kid, kid who didn't know much, who didn't know even how to spell mortgage. And somewhere in the early 2000s, I had a couple of customers, one woman specifically in Lakewood who just couldn't bear, she was a widower and she was living in a condo and she just couldn't afford to pay anything. And I kind of stumbled across a reverse mortgage. There was a woman who was kind of the queen of reverse mortgages in Denver at the time, back in the 90s and 2000s. And she came across my desk and we started talking about it. When I first heard about it, I thought, man, this sounds too good to be true. Like, I can keep my customer in her home. She can live there and have no monthly mortgage payments. It just felt like, what's the catch, right? Like, even to me as a mortgage person, like, what's the deal? So as I learned it and we did a couple of loans and it really saved this woman's life. I mean, for her, it was life-changing, literally. I kind of began to wake up to be, wow, this is really a special, unique product. So then I was dumb enough to kind of walk away from it and not do it too many times. I did it a handful of times. Sure. But then back in the 2012, 2015 range, I kind of was looking I needed to get back into production. I had been a manager and I'd done recruiting and I kind of lost my way, right, in the mortgage world. And you guys know, you're on the front lines. You're helping people every day. And I thought, I need to get back into the front lines. I want to help people. I believe in mortgages. And so I was looking for an angle to get back in more initially to be able to talk to realtors, because you get bombarded by loan officers every day. And so reverse, I thought, well, this is kind of unique. It's niche. And now I underestimated the power of the stigma of a reverse, unfortunately, right? Like, I still thought, this is an awesome program. Yeah, everybody knows this. Everyone. And I got in, and to this day, over 10 years later, I'm still getting kicked in the head. It feels like every week, like, this is a bad thing. You're going to take moms home, and all these things that just simply aren't true. But it doesn't change the fact that this is for the right people, it's a game changer, right? And it's just underestimated, undervalued. It suffers from a lack of undereducation. That's
true.
a word.
No, that's true.
And I'm wondering, like, how do you approach somebody who has that stigma against reverse mortgage and at least get the chance and the opportunity to say, can we just talk about it? Can we go through the situation? Like, how do you get past that barrier?
It's a challenge, Nicole. I mean, it's a big challenge because you guys know, you've talked to clients, that are going, boy, I think you'd be a really good candidate for a reverse. You're the right age and you have a lot of equity, and this would help, ease a lot of financial stress. Mm-hmm. And more than half the time, people are like, no, it's bad, right? They initially, they put up that wall. So it is kind of like to break them down a little bit, Nicole, and just say, hey, look, why don't you just sit down? You're not obligated. Let's just have an informational meeting. Let's bring in your daughter or your girlfriend or your sister or whatever, right? Sure. I mean, all these situations. I had 2 sisters come to me one time. Her sister didn't trust it. So they came in together, ended up doing a reverse for each sister, both of them. Yes. Funny enough, which was kind of a fun story.
Once they understood it.
Once they understood it, yes. Yeah. But there is a big component of education with this loan that you don't have in the normal. Everybody understands a normal mortgage typically. Mm-hmm. A reverse, there's still a big fear factor because of lack of education.
So if one of your clients was in the room today, what is one word they would use to describe you?
Caring, I hope.
Yeah.
Caring, because I mean, people have
sure.
to, and trustworthiness, right? They have to understand, they have to trust that you're going to take good care of them. And I want to be really highly competent, but people have to know that you care about them and care about their situation and that they can trust you. And that's why we oftentimes want to invite in the family member, son, daughter, friend, whatever, right? Because I want mom to feel comfortable when she's sitting at the table that, hey, number one, this is a legitimate program. And number two, I tell people you're stuck with me, right? If I do a loan, you're stuck with me for there's nothing you can do about it, right? You're stuck with me. And that's a good thing. Right. Like I want them to feel like they're stuck with me, meaning that down the road, even though my bank may not service the loan in particular, I still want to be the first call, right? That people get. And so that they're comfortable and they know that they always have a place to get answers and hopefully fix their situation, right?
And Tim, because there's so much to the process, when you go and you meet with an individual, where do you begin? How do you start the conversation and start to help them first to trust you, to know that you do care, and then to explain the process? How does that work?
Yeah, that's a really good question. I mean, I think I've learned over the years that there's a story to be told with the reverse mortgage, right? Can't do this over the phone. Although I have done them, I can lend anywhere in the country, so I do stuff out of state. But I think it's important to make a connection initially to say, hey, look, I know what you've heard, and you probably, most people come into it a little unsure. Let's start with the 30,000-foot view, as I like to say. Hey, here's the myths and misconceptions. Here's the truth. Here's the lies about a reverse mortgage. Here's how they work, right? Here's what you want to do. If you want to do a reverse, these are the important factors to keep in mind. It's a financial planning tool, really, right? More than any other mortgage. So I think you have to start there, Nicole, where you have to really tell people, hey, this is what it is. Let's just talk about it in just general terms. And then I like to kind of then dive into the numbers, right? So I can talk to them, Tasha, and I'll know, okay, you're 68 years old and you have this much equity and this is how much we think your home is worth. Then we can go, okay, based on those facts, here's what it would look like for you. But I don't want to dive right into the numbers because in my mind, I think you have to explain the story to put people's minds at ease. Mm-hmm. Otherwise, they're just not going to even want to listen to you because they're like, right? Is this a scam? Are you taking advantage of my mom or my sister or whatever?
Yeah, I think what happens is family members defend their elders or their, qualified individual like it's the Alamo.
Yeah,
right?
That's right. That's right.
So what are some of the myths and misconceptions of reverse mortgage that you help explain, and kind of counter to those?
Yeah, I feel like I've said this 10,000 times, Tasha, you know what I mean? But but it's really true. I mean, it's funny, but the biggest misconception, number one, is people think that if you do this loan for your mom, that when she dies, if she passes away in the home, the bank gets the home. And that's just simply not true. And that really hasn't been true for 40 years, okay? Today's reverse mortgage, let me back up real quick. The very first reverse mortgages were done back in the early 60s. The problem was from 1961 to 1988, they were all done by private mortgage companies, private banks, private companies. And typically they would own the home when mom passed away, right? I keep saying mom because we know you ladies outlive us guys. So, it's the truth. It's an unfortunate truth here. All right. Let's be honest here. I can say this to you ladies because you get it, But so what happened is, that the bank would get the home. Fast forward from 1961 and 1988, President Reagan signed into law the HECM bill. This is the acronym we use. HECM is HECM. HECM stands for Home Equity Conversion Mortgage. So the HECM bill was signed into law by President Reagan, which feels like a lifetime ago, right?
Right.
Yeah. Yeah, I was like that was when I first got the vote. You know what I mean? Like 100 years ago. But so Reagan signs into law the HECM bill, and basically the government throws their hat into the ring and says, "Hey, we want to do reverse mortgages as well. We see this as a tool to help seniors stay in their home and have more financial flexibility, right, if you will." Now, that's probably the biggest misconception. Is number one, there's two big misconceptions. Number one, you don't own the home when mom or dad die, which is not true. They do still own the home. So, matter of fact, my mom has a reverse mortgage. Okay, I believe in this product. So does my dad. Right, separately. So my dad has a reverse on a home in Iowa. My mom has a reverse mortgage on a home that she lives in a condo near Park Meadows. And if my mom passed away tomorrow, I still get the home. Right, I'm her heir. Me and my brother do. We sell it for whatever the value is. We pay off whatever mom owed on a reverse. Any equity and appreciation above what my mom's payoff is comes to me and my brother, right, as her heirs. So that's the biggest thing. People always think, well, that's it. The second biggest thing that's kind of goes in conjunction with that is everybody thinks that if mom does the reverse mortgage, there'll be no more equity left when she's gone, right? She's going to live there for 10 years. Great, that's awesome. You've just eliminated all my equity, Tim. Thanks a lot, you jerk, right? And which again probably isn't true, right? And here's why: because most reverse mortgages done today, this is an important factor. You have to have probably 50 or 60% equity in the home. So if I reverse that, if I'm doing a reverse mortgage for my mom today, she's probably got to be at a 40 or 50% loan to value, right? In realtor speak, So she's got to have a lot of equity. She's got to have probably 50% or more equity in her home to be able to do this loan. So odds are, just during normal appreciation, and Tasha knows more about appreciation than I do, right? She probably has the figures, but just through that, my mom's equity buffer, right? The difference between what she owes and what her home is worth is going to probably still maintain some kind of, 40 or 50, roughly speaking, right? There's no guarantees of that. I don't want to, I'm not here to make any wild blanket claims.
Right. Mm-hmm.
But my mom did a reverse mortgage 6 years ago. And she still has she had about $100,000 equity buffer back then. She still has about $100,000 equity buffer today because of the appreciation of her condo.
And the age that when you're meeting with individuals, there's a certain age, isn't there, that you can qualify for a reverse mortgage?
There is, yeah. This is kind of a deed restricted loan based on age. Okay. And typically the HECM reverse mortgage, the government insured reverse mortgage, the minimum age is 62. So at least one of the borrowers has to be 62 or older. Now, the older you are, Nicole, the more money you qualify for. You know why that is?
Tell us.
Putting you on the spot. She's like, I'm asking the questions, not you. Come on, dude.
You're the expert in reverse
well,
mortgage.
I don't know either. No. The reason why mom at 82 would qualify for more than mom if she was 62 is because at 82, you're closer to your life expectancy. You knew this, I know.
Unless you're living to 110. These
Unless
days. Everybody's living.
They are living longer.
Longer, right? For sure.
Now, to that effect, though, here's an interesting fact of a reverse mortgage. Technically, a reverse has no term. It's not a 15 or 20 or 30-year term. The reverse mortgage becomes due and payable on the youngest borrower's 150th birthday. See,
okay, I don't want to live that long.
Yeah.
So
that's the reaction I get most of the time. Like, God help me if I live to 150, right? But literally, I mean, you can't. I mean, effectively, there's no term, right? Mm-hmm. Becomes due and payable on the borrower's 150th birthday. So you can't outlive the reverse because of the FHA insurance, because of the federal. Again, this is just an FHA loan, right? It's not some exotic, crazy product. But basically, they say, hey, you can live there as long as you can. So if people tell me, well, my mom, I've had ladies tell me this before, Nicole, where like, my mom's lived to 103 and my grandma lived to 104. Like, great, this is the loan you should have. Like, You can live here till you're 100, no problem, right? As long as you can live in the home, pay the taxes and insurance, you can live there for, till the cows come home.
So what's the true difference between a HECM, home equity conversion mortgage, and a HELOC? Because that's also dealing with home equity.
Great question. That's a great question, because a lot of people oftentimes say, hey, I'm 70 years old. I own my home free and clear. You would qualify for a HECM reverse mortgage, but I can go get a HELOC, right? A home equity line of credit, HELOC from Vector or First Bank or something. And both are true. The big difference is think of a HECM like that. A HECM loan really is a first lien HELOC. It's a first lien line of credit. Okay. So it's just like a HELOC. The difference is number one, any money that I borrow from my HECM line of credit, my reverse line of credit, I don't have to make a payment on, which is huge. Okay. It's a game changer. And number two, it's a forever, or what I like to call a lifetime HELOC. This is important because if I'm 70 years old, Tasha, and I take out a HELOC from Vector Bank, that's great. I can do that if I qualify. But if I borrow $200,000, number one, I'm going to have a payment north of $2,000 a month. That's a big chunk if I'm on Social Security, which I probably am. I'm probably not working. It's massive. Right. Number two, Vector or anybody else can say, hey, like in 2008, a lot of these banks came in and said, Tasha, we're going to freeze your HELOC. We're going to take away your HELOC because the markets had such a dramatic change, right? So the FHA insurance component of a HECM ensures they can never freeze it or take it away from you. If I borrow $200,000, the big difference is if I borrow $200,000 for whatever reason on my HECM line of credit, my reverse line of credit, I don't ever have to make a payment on that, which is massive, right?
So it sounds like stronger financial security within the HECM structure than a HELOC.
I like that. Yeah. That's well said. Well said. I think I'm going to use that. Yes.
Yeah, I just repeated what you said.
Yeah. No, it is. It is stronger financial security, because the other thing with a HELOC is after 10 years, they're going to say, hey, Tim, you can no longer borrow on your HELOC. We're going to freeze the HELOC piece of it. And now we're going to accelerate your payments. So my payment's going up. Oh, Lord. So it's one thing if you're 40 or 50 and you're doing a HELOC, those are great. It's a good financial tool. But to me, if you're 70 or older, and you could qualify, you're going to be way better off having the HECM line of credit.
The other thing, and correct me if I'm wrong, but on a HELOC, you have the payment for the mortgage itself or the HELOC itself and taxes and insurance. With a HECM, you only have taxes and insurance. You don't have a payment on the mortgage.
That's exactly right. Yep,
so
that's
there
exactly
is
right.
Still a payment, but it's much less because there's not a requirement of the funding to go back to the HECM.
That's exactly right.
Okay.
Yep. Yeah. So on a HECM, on a reverse mortgage, you no longer have to make a monthly mortgage payment, but you still do have to pay your taxes and insurance. That's exactly right.
Which I actually think that was the historical challenge with the messaging of a reverse mortgage, is that consumers thought, oh, I have zero payment.
Yes.
And then when mom or dad didn't pay the taxes and the insurance, that's when their house was truly at risk.
Yes.
Right?
Yes, that's exactly, yeah. Well said. And you're right. A lot of people were under the false assumption that, oh, great, I never have to make a payment at all. Well, even if I paid my house off tomorrow, if I stop paying my property taxes, guess what? Mm-hmm. They're going to come take my house, right? Sure. Might take them a year or two, but they're coming after me.
Find you.
They're going to find you, right? Like, they'll get their man. So you're right. That was one of the big misconceptions too. It's like, look, you're eliminating your monthly mortgage payment. You still have to pay. It's like if you do a reverse refinance where I'm paying off a loan and I'm eliminating their payment, Tasha, it feels like I paid your house off, right? Essentially, right? I'm doing air quotes here for somebody that's not watching this. It feels like you paid your house off, but I still have to pay my taxes and insurance in order to stay in good stead with my reverse mortgage. Yes.
And the government.
And yeah. I don't care if you do, but they do.
Somebody does.
Right? They do, and they're going to come get it, right? Yeah.
And you had talked about this as being a financial tool. So usually the first line of talking about finances is if individuals are having conversations with their financial advisors. So do you partner with financial advisors to have those conversations, to have the opportunity to see if it's a viable option for their clients?
Yes, absolutely. I mean, historically, Nicole, financial planners have probably been our best, have been the best lead source for a reverse mortgage person, right? Because in theory, they're talking to our client. Their clientele is my clientele primarily, right? 60 plus, retired or semi-retired, have equity, but maybe need some additional financial help or need more safety and security, right? Now, but the challenge is that literally 50% of the financial planners that I encounter have a negative connotation about a reverse, mostly because they don't understand it, or the companies they work for are so scared of a reverse and the stigma with the reverse that they don't want their financial planners to promote it.
Interesting.
Now, I'm not saying that every person that's out there needs a reverse mortgage. It's not true, right? I mean, I like to say if you have $5 million, in the bank and you own your home free and clear and you're making $10,000 a month in retirement income, congratulations. You probably don't need a reverse mortgage, right? But millions of people today would benefit from, millions and millions of baby boomers if they just understood it, right? Like, this is not probably another big misconception is people say, oh, this is a loan of last resort, right? Once I've exhausted all of my monies and I've spent down all of my money in my IRA or my 401k and my savings, then maybe I'll have to do it. It's like, no, use a reverse in conjunction with your IRA and your 401k and your savings and your monthly, Social Security or pension to be able to live a better life longer and have more financial flexibility and have more money at the end. Really, if you're smart about it, if you're strategic with how you use the reverse, you'll have more money at the end and have a better life, in my opinion, in most cases.
So what does the term financial dignity mean to you? And especially for our elders who are listening.
That's a really good question. Financial dignity means to me being able to when interviewed or when asked, most seniors would rather stay in their home, right? I mean, I've heard 80%, somewhere in that neighborhood.
Talk to my mother. Is that a conversation you've had?
Yeah. So I think financial dignity, one of the things is, look, mom can stay in her home. If she's comfortable and she's mobile and she can get around, they'd rather stay there, right? It's still much less expensive and much more economical and more dignity to stay in your home, age in place, with dignity, than to try to sell that home, take the $400,000 or $500,000 of equity and waste it and see it all go down the drain with one of these senior. And again, the community. I mean, I'm not saying, look, it's different for everybody, right?
Yeah.
But those things are really expensive. That's the truth. And if you can afford it and you like that, good for you. Like, I don't begrudge you. But oftentimes a reverse will help prolong people's equity and stuff and give them more financial dignity, right?
And more options.
And just more financial flexibility. Yeah, more options, flexibility. Yeah.
I just think it's, what I'm hearing you say is getting the word out is the biggest challenge, and the education. Hopefully we can get the information out to individuals so that they know that it's an option. And I'm sure you found situations where you've met with individuals, you go, you know what, this isn't right for you. So how do you make that determination that, you know what, I thank you for your time, but after having the conversation, maybe this isn't the right step for you. How do you get first? We talked about how you get to the table, right? But then having that conversation with individuals, what do you do when it's just, you know what, this is not right for you? Are there other options that you offer?
I mean, sometimes there's options, just doing a normal traditional forward mortgage, right? What we call a forward mortgage, normal mortgage. I mean, to me, Nicole, if you're 70 years or older, you have to be minimum 62, like we spoke about. But to me, like if you're 70 and older, you're probably not working, or you're working very part-time at this point, and you have enough equity and you want to stay in your home, this is a tough product to beat, right? Like this is a product that's probably going to be a pretty good option for a vast majority of the population. One of the biggest reasons not to do a reverse would be if I was talking to your mom and she's like, well, Tim, I could do this and I have the room and she qualifies, but I'm definitely moving to Florida in the next year or two because I can't stand one more Colorado winter. I'd be like, time out.
Yeah.
Because the reverse mortgage is a little bit more expensive, right? And it is a little bit more expensive than a traditional conventional loan because of that FHA insurance, the government insurance, right? I'm not getting paid on that. That goes right to Washington, D.C., and it's there to protect the borrower and the lender and all that. We don't need to go into all those details. But this loan to me is best served someone who wants to be in their home for probably a minimum of 2 years or longer. But if I'm talking to somebody that's in pretty, that's 85 and still ornery as heck, right? And, and not planning on moving, and I want to live here for 10 more years at least, I'm like, listen, this is probably the right tool for you to help give you more financial options. But if you're going to be there short term, that's not a good option. I just met with somebody the other day, and he was quizzing me, and he was from the East Coast, and I like
East
it.
Coasters,
I mean, I like those East Coast, man. It's like right to the point, man. It's like boom, boom, boom. He's hit me, and I'm just like, here it is. I'll tell you the truth, right? And if you're going to stay here, I think this is, makes the most sense, and here's why. Well, you got to lay it all out and just look at the situation. I mean, probably the biggest thing is right. You want to make sure, like, is this the home you really want to be in? Because a lot of people sometimes are truly like, well, I could stay here 10 more years, but I also maybe want to move to South Carolina, be closer to my daughter. It's like, make that decision first, because there's no prepayment penalty on a reverse. So if you did a loan and in a year you decided to move, no problem. You're not in trouble. They're not taking, you sell your home, take the equity that's left over after paying off the reverse. But I think that's the biggest hurdle, is like, let's make sure this is a home you see yourself living in for the foreseeable future, right?
What additional safeguards and consumer protection is there within the process of doing a reverse mortgage? Yeah.
You touched on this earlier, Tasha, where you're talking about people would get kicked out of their home because they didn't realize
that was the fear.
That was the fear, right? I'm going to get kicked out of my home because you're not paying your taxes and insurance. So that was a lack of education. Probably the second biggest thing tied to that was in the last 10 years, this has changed. This changed as of 2003. So it's been a little over, 10 years ago, or 20. And now I'm confused here. 2013, I guess, is when this changed. Sorry. Yeah. I'm getting my years mixed up here.
Doing this a couple of years.
Yeah.
You're allowed.
Okay, thanks. But so what happened was this case of, let's say I'm 65 and my wife's 55. She's 10 years younger than me. In the old days, we could do the reverse mortgage, right? But really the loan's only in my name because I'm the only one that qualifies. My wife's too young. She doesn't qualify. So we do the loan, and then we have the loan, and I'm in there for 5 years. And then I turn 70 and I pass away suddenly. Well, my wife was never on the loan, even if she's now old enough to, whether she's old enough or not, there was not a protection in there for the spouse, the non-borrowing spouse. So they'd come to my wife and go, hey, Michelle, you got to either refinance this or sell the home. So now, the wife's going, we did a reverse mortgage and now I'm getting kicked out of my home, right? Mm-hmm. So HUD, the government, the Department of Housing and Urban Development, steps in and goes, okay, we got to figure this out. So what they did was they allowed for an eligible non-borrowing spouse. So this is one of the big changes in the last decade or so, where they say, look, I can be 65, my wife could be 55, and as long as she's married and living in the home, if I pass away suddenly, even if it's 6 months after I do the loan, it doesn't matter. It protects the non-borrowing spouse. It says as long as you were still living there and married to that person, you can live there the rest of your life under what HUD calls a deferral period. They basically let the non-borrowing spouse live there the rest of their life.
Is that true for same-sex partners as well as common law?
Good question. Same-sex partners, yes, as long as they're married, as long as they're legally married, yes, then they're protected, right?
Okay.
Yeah, they're always protected.
And common law, since, like, for example, the state of Colorado may recognize that common law is a legal union. Is that recognized?
In the HECM world, I think you have to be married to be able to be protected as an eligible documented married as an eligible non-borrowing spouse, and then you're fine.
Okay.
Now, you can, interestingly enough, and I've done this a handful of times, you can do it with two borrowers who are not married. Both of you have to be old enough, right? Mm. So my brother and I, if I'm 64 and he's 62, technically, and we owned a house together, my brother and I could do a reverse mortgage together, right? That'd be a heck of a bachelor pad, let me tell you, Tasha. I mean, I don't even want to, we won't even go there. You know what I mean? This is a PG-13. No, I'm teasing. No, but I did a reverse for two sisters up in North Glen, and they're awesome. Like these two ladies have been living together for a lot of years, and they have enough equity, and they want to continue to live there. And the beauty of a reverse, one of the things is whether you're a spouse or if you're just siblings, if one of those two sisters passes away suddenly 6 months from now, the other sister can continue to live there, have no monthly mortgage payments, have access to the funds that were in their line of credit, right? And there's no pressure. It takes the pressure. Otherwise, it would be stressful for the surviving spouse or the surviving sibling to continue to live there. Also, I've done it once where I had a mom who was 92 years old. Her daughter, we waited a year until her daughter turned 62. God bless this woman, the mom, man. She was tough as nails. She could have done it easily, but we waited till her daughter turned 62. And we did a reverse on the mother and daughter because they were both 62 or older. And the mom ended up passing away about 14 months later. And the daughter's still living in that home in Centennial to this day, under the reverse mortgage. So again, it protected the daughter. She would not have been able to probably stay in that home, honestly, if it wasn't for her mom building up all this equity, waiting for her daughter to be old enough and having them both on that reverse mortgage.
It's really nice to know that the industry has evolved with the education, the transparency, the options, right? That it's not a one size fits all, but there are some moving parts within it.
Yeah, there is. It's the most flexible loan out there, right? Really. I mean, really and truly, if you're old enough and you have the equity, it's so flexible. The part that hasn't is the stigma that hasn't evolved yet, right? Like the connotation, right? The thought process around a reverse has not evolved yet, really. I mean, that's the unfortunate part.
Yeah, there's still consumer misunderstanding.
Big time. I mean, that's my biggest challenge every day is there's 70%, 80% consumer misunderstanding out there,
What do you think is going to take to change the perception of that? We don't have time.
Yeah, I mean that's the $1 million question.
3-day podcast.
The lady that first introduced me to reverses back in the early 2000s. The queen of reverse. She's now retired, and she was a legend. She was on Governor Roy Romer's task force in 1988 when this thing kind of evolved and kind of came into being. Right. So she would say, Tim. Every year I wake up, in January, I go, this is the year. This is the year when everybody's going to realize this is a great product and everybody's missing the boat and they don't know how this works. And then she goes, this isn't the year. This isn't, you know what I mean? And her hopes
determination is incredible.
Her hopes are dashed, right? It's like, I wish the government would just come out like on a wholesale thing and go, hey guys, guess what? We got this awesome tool over here. If you qualify, this might be really something you should look into, right? But boy, until that happens, I don't know. I think you just keep fighting the good fight. Maybe it will become more now that we have AI and we have more, right, the internet, and there is more info out there. Sure. I get calls from all over the country. It's surprising on my videos. I had a guy call me from New York and is quizzing me on, and he's like, well, I liked your videos. It seemed like you knew what you were talking about. And it's great. Like, I think more and more it will become, but it's been a slow process, slower than anticipated.
Are there any red flags that you would say if somebody is looking to learn more about reverse mortgage and they're looking at different loan officers, what are some red flags that they may encounter or they should be on the alert for when they are looking to speak to somebody about a reverse mortgage?
I mean, that's tough to say because, I don't want to look like I'm throwing everybody under the bus.
Or when they're meeting with you, what are some things they should look for and having a conversation with you and have questions laid out to know if this is right for them, do their homework a little bit ahead of time? Yeah.
I mean, I think it's important, to stress the education first, right? This is, I'm not going to meet with somebody and try to sign them up, quote unquote, right? When I come out to meet with your mom tomorrow, Nicole, I'm not coming out there with loan application in hand, right? And if they are, and they're like, we need you to sign it, we need you to do this, we need you to go, it's like, that would be a big red flag to me. It's like, right, like this should be informational, right? I want to have the conversation. I want you to be comfortable with me. I want you to be comfortable with the program and what it can do. I want your daughter to be comfortable with how this works. Because if I do a good job, the daughter or the sister or the friend should be my biggest advocate, right? They should be like, yeah, I think this actually is good, Mom. So I think it is, education and information first. I'm not trying to lock somebody down. Although you'd be shocked. I mean, how many times where it does, I go out there, I'm like, golly, this is like, this seems like a no-brainer like this. And still people, just because of the fear factor, oftentimes they still don't, or it may be 6 months, it's a longer sales cycle, right? You have to be willing to hold their hand. And I had a lady once tell me, she goes, you know what you are? She goes, you're a professional hand holder.
Fair.
Yeah.
Right?
Totally fair.
Yeah. Mm-hmm. In a lot of ways, the Mama Bear team, you're professional hand holders too.
Yeah. Well, and when we're helping our elder community, it's not about, do you want the red one or the blue one, right? It's about educating on all of the options and then letting the process happen of the information to sink in and the decision to be made to move forward.
That's right.
Right? So it's not I'm going to present it to you today. You're going to make a decision in 5 minutes and we're going to be rocking and rolling.
Right.
That's not what this is about. It's really about this methodical education and empowering the elder with, what is it? What does it mean for me? What are the risks? What are the benefits?
Yeah.
How do I look at this from a long-term stability and financial security position?
Yes.
Right?
Yes.
What have you learned in your career of working with elders and the seniors on aging and taking control of your options? What have you learned through this process towards that?
One of the things I've learned, Tasha, is I really love my client base. I mean, it's interesting. They all have stories to tell, right? I think that one of the things I've been blown, and that's not exactly your question, but I've been amazed by the people, right? It's so fun to meet these people, and you meet this lady who's 85 years old and has been, living on her own for 20 years, and she owns her home. She's just done it. She just carve out her niche, in the world and break through the forest and with a machete, so to speak. It's really impressive. Like the people, and they were all young at one time, right? Mm-hmm. Like I think about like this guy that I'm sitting here talking to who's in Vietnam who, is having a hard time. And this dude was 40 years ago, he was a stud. Like he was the master of his universe. And now he's a little more vulnerable and now he needs a little more help, right? And so I think it is taking more time, more care, trying to be helpful, be willing to answer the phone call 10 times from the same guy, asking essentially the same 5 questions.
Sure.
Because he's got to get comfortable with it, right?
Right.
And that's just a fact. I mean, I can think of this lady right now where she tried like for almost a year to try to come up with a better solution than a reverse. She just kept fighting. And finally she's like, all right, I can't do it. This is the only thing that makes sense. And it was the only thing, right? But everybody on their own time.
Yeah.
And so you just got to be patient and know and hopefully be there for the long term, right?
Well, and isn't that true of aging process in general? Mm-hmm. You got to, know what it is. You wake up with a new pain tomorrow and you're like, okay, what is that? Do I need to get that looked at or, whatever. Same kind of process of going through this is, okay, this is new.
Yeah.
How do I get comfortable with the new in order to make the right decision?
That's right. That's right. And then, it's funny, you bring that up, and it makes me think, Tasha, of some of my toughest critics. I'll go meet with a lady and she's, just tough. And she's like, well, this isn't going to be right. And you know what I mean? She's fighting you all the way. They end up becoming your biggest advocates, right? They end up becoming your biggest cheerleaders because once they understand how it works, it's like they're like, oh wow, like they become an advocate for this program, and it's fun to see, right? But more than anything, it's just fun to know that you're helping somebody stay in their home. It's not always rainbows and butterflies, right? Like it's not all it's
welcome
not
to life.
Yeah, welcome welcome to life. But I think of this sweet little lady in Arvada, and her name is Louise. She goes by Lou, and she's a little Italian lady, and I love her. You know what I mean? Like she reminds me of my aunt, and I just love her. And she calls me, and she's always worried and nervous. And her life has been hard. She lost her husband, but this loan I know has been able to keep her in her home, right? And she's had health issues. So again, right? It's not all easy for her. But I know above all else, this loan has been able to make her last 7 years better. More enjoyable, and she's had some money to be able to do a few things, right? Even though she's had a hard life and she's had some real challenges, on her personal life, but it still has made it better, and I feel good about that. Like I feel like I get paid to help people. It's like this is a pretty, you guys do too, right? I mean, that's one of the
feeds your
things.
soul, right?
It does. Like,
Totally.
I mean, I don't work for free, but it feeds your soul, and I get a lot of, I feel good about that, right? I can hold my head high.
I love hearing the story, how you meet with them and about their background and what did they do in their when they were younger as a profession, because I think that builds, you get to understand them, why they are the way they are today, right? I can tell you why my mother is the way she is because of what she went through. So I think that builds a story. And when we do this too, we meet with individuals and we want to know like more about them. It's not just about a transaction. We want to know their story. We want to know why they feel the way they do. And listening to you today is kind of, I'm getting that same sense that you sit down with them and it's a journey, but you're having that conversation to know a little bit more about them. It's just not about the facts of the reverse mortgage.
Yeah, because just like you, I mean, most of my stuff locally is done face to face, right? Like I'm going to go meet, either they're going to come and see me in my office, which they can, or more times than not, I'm probably going to their home, right? Mm-hmm. And you're sitting across the table from them and you're learning. Like Lou, ran a little Italian restaurant, right? So she, but she worked her butt off, right? She's worked, but you learn all these stories. When I go see her, every time it's always coffee. It's like some little, sweet treats.
Sure.
You know what I mean? She's like
a treat. Go see Lou.
Yeah, exactly. She's my Italian grandmother, man. She won't stop feeding me. I'm like, all right.
You can do the podcast at Lou's what?
I know. Listen, we could do it. We could set it up. All right, and it's awesome. But I love that, right? I mean, because you're right. Everybody has a story. Everybody's come from somewhere.
Yeah.
People matter, right? People matter, and this loan helps make that last stage of their life hopefully easier, more enjoyable to some extent. I know it doesn't solve all the problems, but it would help, 10 million more people today if they really understood it. Truly.
Absolutely. Your YouTube, for those listeners out there, Tim has a YouTube channel and you've got a lot of educational videos on there. So they're very informative. So just keep doing what you're doing. I mean,
yeah, thanks. My channel, I mean, I've done hundreds of videos. It's like, I'm not trying to sell what's the rate this week, right? Mm-hmm. Like, I'm trying to explain to you, this is not a scam. This is a financial retirement tool. If you understand it and you deploy it right, it can be a game changer.
Yeah, it's really clear that you lead with heart, and it's all about empowering someone for their peace of mind and their financial security. So great job. Keep doing what you're doing. Is there any last thought that you have that you would like to share with our listeners that we didn't cover today?
It's funny. I wrote down some notes, although you guys have had so many good questions. I'm not even looking at my notes at all. I just think that oftentimes, Tasha, people think this is a loan of last resort, right? And they had to take their equity and they're living on that, and that provides a great stopgap and makes it possible to live the rest of their life, right? Without, having to live on scraps and, literally, right? So it can be that. But for so many people, I think people misunderstand. I'm working with a couple right now who own $1 million home in Highlands Ranch. They own it free and clear, but he was in the contracting business, so he doesn't have a pension. He doesn't have a ton of savings. So their savings is their, $1 million of equity. And to be able to leverage some of that, to be able to live out the next 15 or 20 years of their life and do a little traveling and enjoy their life, they're not going to use up all their equity, right? They got a ton of equity. We're going to use, if they use $200,000, but they go out on their terms, it's a game changer, right? It's a thing. So if you could sum it up in 2 words, I'd call a reverse mortgage a smart leverage. We're not taking all of your equity. We're going to use some of your equity in a smart way, smart leverage to be able to live out your life. And it's different for everybody, right? For some, it's just eliminating their monthly mortgage payment. For my mom, just getting rid of her monthly mortgage payment. For this couple in Highlands Ranch, they're going to be able to tap into this reverse line of credit, right? And use it and do some fun stuff with their family that they want to do. For everybody, it's different, right? And that's kind of the fun part, I think, for you guys too. Like everybody's situation's different. Yep. And that's what kind of keeps you coming back, right? Like otherwise you get bored, and it's more fun. Every day is kind of like, okay, what's on tap for today, right? So
options are awesome.
Good problem solving, right?
Yeah.
And if individuals wanted to get in touch with you and where do I find Tim Oddo? Where would I find you?
Well, first off, I would encourage them to just Google my name. So Tim Oddo, ODDO, reverse mortgage. So if you Google Tim Oddo reverse mortgage, I have a Google business page. And I'm proud of this, Nicole, but I've got over 100 Google reviews on just my reverse
love it.
mortgages.
That's awesome.
Which I'm really proud of that because, again, it's a niche product, right? But I think hopefully that shows people like, look, this is what I do. I take it seriously. I want to be, good at what we do, me and my team. Check out my videos, that kind of thing. I have a website. It's www.nomonthlymortgage.com. Read my reviews, right? Don't take because I always feel like I can talk here, hey, this is great. Tasha, listen to me. This is the best thing and I'm awesome. Go look at what my clients say, right?
Yeah, absolutely. Absolutely. Well, and thank you for letting our listeners know that reverse mortgage has options, and that's what this is empowering them with.
Yes.
Thank you for that.
Yeah, my pleasure.
Thank you so much.
Thanks for letting me be a guest here, you guys.
Yeah,
This
great.
has been great. Yeah,
Awesome.
I had a great time. Thank you.
Tim, thank you for such an open and empowering conversation. You've helped our listeners see that a reverse mortgage isn't about losing control. It's about gaining options.
And to learn more about how a reverse mortgage might fit into your retirement plan, visit www.nomonthlymortgage.com, or you can connect with Tim on LinkedIn. We've included all the links in the show notes.
Remember, financial freedom in retirement doesn't come from fear. It comes from education and choice.
And as always, we're here to help you navigate the journey with care, clarity, and confidence.
We're Tasha Beckman and Nicole Robilotto, and this has been an episode of the Empowered Elder Podcast, where every elder has a story and every story matters.
Until next time, take care, stay curious, and keep building your best next chapter.